Financial services is one of the major sectors of the Mauritian economy. Well, let's find out how it's doing. We're speaking now to the Chief Executive of Standard Bank here in Mauritius, and that's Lakshman. Bheenick.
A lot is happening in the financial services sector. We are a bank, but the financial services encompasses quite a few areas of activities, from insurance to asset managers to the broking to companies who incorporate structures and organizations into Mauritius. So it's a quite significant sector for the economy and playing the top three, actually.
To what extent is it a contributor to the country's GDP?
It's a significant contributor, 12%. It oscillates between 10 to 12% of GDP. So a quite key contributor, and to just make it relevant, it's as big as the tourism sector.
And what is driving that growth?
The growth, I think, plays to the country, stability. I think everybody wants stability and certainty. And Mauritius has had that track record, I wouldn't say straight away after independence in 1968, but at least in the late 70s and the 80s, 90s up to now, we've seen that stability. That said, Mauritius is an island economy. We are takers of what happens globally. So, you know, when the world slows down, we slow down.
What impact does the size of the country have in terms of being able to scale in whichever sector you're in?
We always say consumer markets and the size of the population is a key input. But that said, our size also gives us agility. So when it comes to policy making, I think we can move fast. And we have moved fast over the decades, I must say. Innovation and implementation of policy has been quite effective.
What is the sense of the monetary policy regime and interest rates at the moment?
Well, inflation has been very low in Mauritius, less than 1% over the past 2 years we've seen. We've seen a pickup lately, and that has paved the way for a very low interest rate environment, close to about 2% right now, if you look at the government treasuries and that environment. So the monetary policy in its current state, I would say, promotes growth. And the eye that we need to keep on is on the inflation side, so that the cost of living doesn't get out of kilter. So it's always a balance. It's never perfect. It's never perfect. But I would say monetary policy has served the purpose of the country's economy over the recent years. I would put it like that. As economists will say, there's diverging views. There are always two schools of thoughts. But so far, I think it's served the economy, and government as well has been able to fund themselves at quite low rates for their expenditure. So factoring everything in, I would say, yeah. And given the world trends, where some economies have gone negative interest rates or low interest rates, I think we're still in a good space.